Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is an earnings special edition. Our focus is on Titan Company, which has reported a standalone net profit of 786 crores for the March quarter, a growth of 7% from the year ago period. We've also seen the revenues come in at 11,257 crore rupees for the Jan to March quarter for this company, which is in line with largely street estimates. EBITDA, however, has come in at 1109 crores, growing by 6.2%. However, this is slightly below the street estimates, and the margins have declined by 90 basis points on a year-on-year basis to 9.9%. To decode for us the earnings insights as well as sharing an outlook going forward from here on, I'm now joined by a very special person. The top management of Titan Company joins in. Mr. Ashok Sonthalia, the CFO of Titan, is with us. Mr. Sonthalia, very good morning and thank you so much for taking the time out. Well, largely below the street estimates, and therefore we'd see a dip on the stock prices as well on Titan today. As far as the margins are concerned, most of the brokerage houses are concerned with the kind of dips that we have seen, and they also foresee some pressure going forward from here. Could you reason out for us, sir, what were the key reasons behind the margin compression and where do you see the margins going forward now?
Good morning, Sakshi, and good morning to your viewers. You see, as far as Q4 and FY24 is concerned, on growth front, we have delivered pretty well. While environment was challenging, but still things have worked out very well for us. On the jewelry margin, which eventually impact the entire company margin because they have a substantial contribution to that, has been affected by two reasons. One is that gold prices have been really seeing a huge run up, almost 18% growth in the last financial year, and particularly in Q4, lot of volatility and lot of increase, which impacted the consumer sentiment. And whenever this happens, people wait for the stabilization of price and then they only come back. So that was the impact in Q4. The other thing, of course, competitive intensity in jewelry segment is increasing, is on the rise. Not only the existing players are very aggressive in expanding their retail footprint, some of the new players are also joining the bandwagon. So that also you need to respond, you need to attract customer, you need to build your brand, further strengthen your brand. If you notice that 54% of our customers were new buyers in Q4, and which is a very encouraging sign for us. This number was 46 to 48% till last few quarters. That only suggests that we are gaining customers from our competition, and which is very good. One point on margin, I will tell you, we have always talked about that in FY23, we have some one-off gains in jewelry business segment because of, and which were not, cannot be repeated year on year. If you adjust for that, then 30-40 basis point impact came in this year, and which was because of those two reasons which I spoke about.
Right. So, but how do you see the margins pan out in FY25? Is this pressure going to continue for a few more quarters? And what is your outlook then for FY25?
So, yeah, we don't expect competitive intensity to easily go away soon. Over a 2-3 year period or 18 to 24 month period, certainly some of the weaker players will kind of give away either, and we will be able to further gain market share over them. I expect that margin would be more centered around 12% for jewelry business. We have always said that growth is our priority, but not at the cost of margin. While we do take tactical calls to respond to the market and attract our consumers, but yeah, kind of 12% near about margin I expect for jewelry business.
Okay, so because of the surge in gold prices, like you pointed out, and sharp increase in Q4 itself, how was the demand in the jewelry segment? And do you expect the gold prices to soar higher even in FY25? And therefore, how do you see the demand?
So consumer sentiment was weak, but we were able to attract customers through consumer offers, through gold exchange program. In the increased price environment, gold exchange program works very well because people are just trading with their old gold to new gold and new design. So they feel far more comfortable at that point of time. So we were pretty aggressive on that. So we were able to achieve growth numbers. But yeah, it came at a cost of margin, slight margin depression, I would say 30-40 basis point. FY25 trajectory of gold price prediction is very different actually. it gets affected by so many factors, and those are all global factors. Geopolitics plays a very, very important role. Whenever attention happens in the market, the entire world moves towards a safe haven asset class, which is gold, and it increases the price. People think that's the best asset class. So I don't think that we can predict that very well. But our job is that, first of all, we hedge completely our gold price exposure. So we are not affected either very positively or negatively because of those moves. And how do we kind of keep our customers and brands, very, very connected with our brand? So that's the intention. I would expect that FY25 gold prices would remain at the same level or slightly soften, but don't expect it to correct too much.
Okay, and did you also pointed out about the high competitive industry intensity that you're facing in the jewelry space. So is
Yeah.
it both in gold and diamond space? Is it more in the higher price or the lower price items? Could you specify a little more details for us?
So, the different players, so it is in gold as well as in diamond, no doubt about that. It is at various price points, I would say, at the top end of the pyramid, which is a high value studded, high value, there is also competition. Their competition is more from existing players. But if you come towards the bottom side of it, everyday, daily wear, then there is a competition from the many new entrants which have come in the past 18, 24 months in the industry, because they are playing more in that and in digital space, online. So while the competition is everywhere, but we are also playing game with very, very strong brands, like Zoya, Tanishq, CaratLane, and Mia. Tanishq is a very, very strong brand. CaratLane and Mia are also becoming stronger day by day. And that's our effort. That's the work. How do they become very dominant player in the sub 1 lakh category, CaratLane and Mia? And Zoya also starts growing. It's still a small brand, but it is more luxury and niche kind of brand. So how can it also grow there? Because Indian consumer and Indian market is getting ready for luxury space.
Right.
Yeah.
So also wanted to ask, as far as the increasing demand and inquisitiveness for lab grown diamonds is continuing, are you facing competition from this space as well? And this space could also, do you think, can have a higher competitive intensity going forward from here? How do you plan to deal with it? Are you planning any discounts on the real diamonds? Are you planning to do any price cuts for that? And if you could give us a sense of how are you facing the competition in terms of lab grown?
So if you look at lab-grown diamond, I think the starting happened in US market. And in US market, particularly in the bridal engagement ring, where lab-grown diamond has meaningfully entered and kind of, I believe, a good amount of share is going towards lab-grown diamond.
Sure.
But if you look at other global markets like Europe or China, which is again big jewelry market, diamond jewelry market, their lab-grown diamond has not made any entry so far. It's a very, very at a fringe. In India, some of the new players, some of the new brands have started entering into lab-grown diamond space. Lab-grown diamond prices have been coming down very, very rapidly. And that is where store of value aspect is, consumer is still not able to deal with that how that is going to play out. Um, uh, and if you really see, we talked in past also that it is the high caratage diamond where solitaire, etc. plays. There, perhaps there is some impact or some hesitation in consumer mind. Market has corrected from the price point of those mine diamond in solitaire. We also took correction in last 12 months in those price points, and there is some slowness in growth of that segment. But our jewelry business, largely 90%, is in a very, very small diamond space. There we are yet to see any impact of, direct impact of lab-grown diamond. Consumers are not asking for that at this point of time. We are keeping a very close watch. It's an important development which is happening. And in India, diamond, there are a lot of diamond growers are there, lab-grown diamond growers. So India is part of action in a way on the supplier side. So yeah, it's an important development, keeping a close watch. If the consumers connect with that category well, we will also see what we should be doing.
Would you be looking at acquiring any lab-grown diamond makers, or would you like to introduce some of your own segments in this space, if at all, in the long-term strategy? If I understand from you, how will you be going forward with it?
So nothing very concrete, Sakshi, at this point of time. All options are open. We are keeping a very, very close watch on this segment. We had a minority stake in a lab-grown diamond jewelry company less 2 years back. So we are keeping a very, very close watch on this.
Which company was that one, sir?
In US, 2.5 years back, we had taken a minority stake in a lab-grown diamond company. Yeah.
Okay. So this is definitely a keen watch for you. I will continue to ask you, even in our future conversations, how you're panning out with this, because this seems to be a clear competition that's developing. But in terms of the market share, sir, I think there was an aspiration of a 10% market share in the jewelry space. How are you progressing towards that?
So that is intact. I think we are at 7+ percentage point. As I spoke about the acquisition of new customers, data suggests us that we are gaining market share, and 10% target was for FY27, and I think we are on track.
Okay, so do talk to us about your emerging business as well. Tanera Fashion and Fragrances brand, how has that performed in Q4, and how do you see it panning out going forward from here? Meaningful contributions really coming in on the revenues front from this space as of now, or how soon do we see that happening for you?
So Tanera is, of course, growing much faster than jewelry, watches, and other categories. It's a very, very important and promising category for us. But still, the scale is very small, so that they can't move the needle so effectively. It will take some time. But our plan to grow Tanera in a much more meaningful fashion is happening. We are already 70+ stores in some 37 cities, and I think we will add another 30-40 stores in the coming year again. This category, our whole customer value proposition has become very sharp. The whole supply chain, again, like in jewelry, we did the Karigar part, where we uplifted the whole infrastructure and dignity of labor in a very, very meaningful manner in jewelry. The same thing we are trying to do with our weaver salas. We already have, I think, 15 to 20 weaver sala in different clusters, where we are upgrading the infrastructure of bunkers, and they feel really very happy and well connected now, coming back to this profession, which they have started living actually. So again, the same in a way template, where you uplift the infrastructure and lifestyle of the bunkers who actually weave such a wonderful art pieces, and kind of give customer very, very unique, authentic offerings. And that is the Tanera piece, going very well. 60% or more than 60% they grew. They are expected to grow in that fashion for next 2-3 years for sure. Fragrances and fashion accessories, where we are more focusing on women's bag in fashion accessories, they are doing well. I think FY25 will see more action around that. Fragrances Skin has been slightly older brand for us, almost 10 years. But now we are kind of spreading the wings of Skin towards premium as well as towards value segment, because actions are both sides, on the premium side as well as on the value segment side. So some of those actions will be taking place in FY25. And we expect growth rate of all these emerging businesses to be much higher than watches and jewelry, but still it will take many, many years for them to really move the needle on revenue contribution. So,
okay. Any more segments or maybe products that you will be looking at launching, sir, in FY25 from your emerging brands?
In FY25, I don't think we have anything, but we are never close to the idea. But at this point of time, focus is to kind of scale up the already incubated new brands rather than further diversifying into newer categories. So that's the idea.
What about expansion, sir? You did talk about 30-40 stores for Tanera you'll be looking at in this year. Overall, are you looking at adding more stores in both in India and internationally, even for Tanishq and Titan?
So Tanishq jewelry brands, 15 Tanishq store and 1 Mia store is there internationally as we speak, 16 stores. I believe in the next 12 months, another 12 stores of Tanishq can come in, or Tanishq Mia combination can come in. In India also 40-45 stores, I would believe the new Tanishq stores will be opened. Many existing stores are getting expanded, Sakshi, which doesn't get into the count. If you look at the retail space which we are creating, they adds up meaningfully. So, and CaratLane should also add 45 plus minus few stores in the coming year. Mia also. So the expansion is not slowing down. Actually, I was looking at some of the data that out of 3,000 stores between different brands and channels which we have, different categories, 1,000 store, more than 1,000 store got created in last 3 years. So whatever we did earlier, in last 1 year, more than 1,000 stores we have added across jewelry, watches, and eye care. So I would expect, some adjustment, that trajectory to continue.
Okay. As far as pricing trends are concerned, sir, how do you see things panning out for you for jewelry in FY25 and for your watches and eyewear amidst competition? How do you see that planning out for FY25 now?
So as far as premium product offerings are concerned, that's happening, across categories, whether you talk about watches, whether you talk about jewelry. And jewelry price gets determined more by the underlying commodity price movement, which is gold and diamond. Because as you know, we make our money mostly converting these raw materials into jewelry. So very difficult to say how the gold price would behave or diamond prices would behave. But premiumization journey in jewelry as well as in watches is on firm footing, and we are taking right steps to kind of keep progressing there. In eye care, we are playing both sides. We made some good offering on the affordable fashion side, and that's getting a lot of traction in last 2-3 months. So we are very, very excited and hopeful about that business also in FY25.
All right. Well, many thanks, sir, for being with us on the show and discussing these wonderful insights from the quarterly earnings. All the very best to you for the upcoming quarters, and looking forward to more conversations, sir, because this is a space that most consumers are going to be interested in, and we will hope to get more insights as how the developments are taking place, both in the jewelry as well as your other businesses too. Many thanks for being with us. Truly appreciate your time.
Thank you. Thank you very much.
All right, viewers, we will wrap it up at that. That was Titan. We do see continued subdued move as far as the stock is concerned. Even in the F&O space, it's currently down by about 6% and there is some weakness coming in as far as Titan earnings. But of course, the company's management is hopeful that things should look better as far as FY25 is concerned. In terms of margins, they have an outlook of 12% odd, although it may take some more time. And it's a difficult time for them to predict the gold and diamond prices as of now. But the key takeaway is high competition and high competitive intensity is the key reason, which is putting some pressure on the margins. And to handle that, the company is continuing to focus more on promotional spends, on discounting trends that may continue even going forward from here. As far as even lab-grown diamonds are concerned, this is a space that the company is clearly, keenly watching out for. Too premature, they say, right now for them to really take a decision as to whether they are going to introduce a segment of their own or to acquire any brands that are existing in this segment. But that is something that they will continue to watch out for. So that will be a key to watch out for as the next segment that Titan gets to get into as far as the jewelry segment is concerned. We'll continue to get you such exciting conversations around earnings. So do stay tuned with us on Business Today Television.